How you doing? Since we were unable to do the PA review for yesterday, I'm gonna do a two-in-one here. We're gonna review Thursday and Friday. How you doing tonight on this Friday night, right? Usually very, very lonely on a Friday night. Not a lot of people tend to do work on these nights, right? It's just this is what I do. Can't stop. I love it too much. Well, I hope you're doing great, and we're gonna get right into it, right? So, starting with today, we're gonna go back. So, we're gonna look at today, and then we're gonna look at Thursday, which clearly Thursday we had a continuation lower, continuing expanding lower, and today we had a beautiful retracement into our range, providing if we look at the classic Excel week that just happened, a beautiful TGIF setup to these 20 and 30% retracements. So definitely some nice PA. We went way further than just the 20 to 30% TGIF objectives, but these are the clear draws. These are the easy draws to have as an objective, if I can say that, right? We had a very big down Wednesday, which we did already reviewed, but actually we're going to go on Thursday next to make it simple, if I can say it like that. What's up, Vic? Nice to have you with us as well. So if we head here and actually remove those TGIF to Thursday and look at the price action, right? I'm on a 15-minute chart for a very simple reason, right? I'll go back to the daily and actually go into replay mode so that we do not see the Friday price action on both assets. You'll notice that from a daily standpoint, we haven't retraced into any sort of inefficiencies, right? Our objective could have been defined in one very simple manner. Let me just figure out which one has the wrong offset. So let me just move the 7, put that on 15, just so we can start seeing something. All right, so we just continued expanding lower, flipped the monthly open as we saw Nasdaq do the previous week on this week for ES right here, and continued expanding lower. Now, yes, we formed SMT at the current moment, and on Thursday more specifically, but our sell side liquidity and our weekly order block were clear objectives, even though we did take them out on Wednesday. Actually, from what I can see right now, we had clear objective lower, which was our weekly order block, right? We talked a lot in depth about it. And even going down to a 4-hour chart, you'll notice that on Thursday specifically, we didn't have any sort of higher time frame PD array up until that 10 a.m. open, which, as we can see from the candle, we took out the lows of the range and went all the way up to our beautiful 4-hour fair value gap right here. Oh, not a weekly fair value gap, a 4-hour fair value gap. If we look at ES, you'll notice that we did the same thing, drove back into our 4-hour fair value gap. That was the same, right? If we look at the candle specifically to try and get a correlated reaction, it is this specific candle which we would have been looking at. But anytime we look at PD arrays, we're always going to refer to premium and discount, right? But in one day, I don't anticipate it to retrace all the way back up to that range, while ES has. Did it retrace into our premium array? No, I do not regard this specific fair value gap as our premium array because it is at equilibrium, but we did retrace quite high, which would have been some nice low-hanging fruit objectives, right? If I go down to the 15-minute chart so we can have more information about the intraday price action, right? More specifically, let me just remove drawings. Oh, I do not want to remove the higher time frame levels actually. You'll notice that right here, we open, and let's say I mark out our beautiful midnight opening price, this candle, which opened low, bearish candle. Our midnight open, you can see that we consolidated throughout London right here before offering a Judah swing lower. So now that was not a London raid framework because before New York Open, we had not taken any side of the London range. But with this Judah swing lower, and let's take into account that we had 8:30 news as well, we can see some clear equal highs form at these levels right here, followed by some low resistance liquidity here that we induced with this run, this manipulation from the news. So you had clear objectives higher with all this consolidation and more specifically, equal highs. So those were definitive objectives for me starting my trading on Thursday. So I was looking for long specifically just due to the price action and the fact that in my mind we were due for a retracement after such a large range day, but we had to keep expectations low. Meaning after a day like that, after a 700 handle day almost to the downside, it could keep going. So you had to be ready for everything. If we look at the 1 minute price action, this black line right here, I just want to point out, is my weekly order block. So I'm actually just going to go mark it out differently so it is easier for us to spot. By the way, if you guys were not knowledge, if you write it with array, it will adjust to any time frame you're on so that it is always on your chart, as you can see right here. So when within this weekly, I don't want to look at Friday, sorry. I want to look at Thursday. So when within this weekly order block, I do understand that the reaction that will occur might take time, but I am going to be looking for longs out of this. But now the price action was bearish. I'm not going to speak on any short opportunities because, as I just explained, from any sort of pre-market analysis point of view, I would have been looking for a long. There is no reason for me to be looking for a short unless I'm scalping, which in this case I wasn't. So I would have been looking for longs, waiting for the raid of the low of the range, which at this current moment was London lows. We had a beautiful raid of these levels. And if we see right afterwards, we have our first signal that we could indeed be looking for higher prices. How do we know that? Well, invalidating premium bearish arrays. Well, at equilibrium technically, but invalidating bearish arrays gives you an insight that at least short term we have an objective higher. Now this is a beautiful entry, but this is not the rise model. So I'm not going to comment on utilizing inverted fair value gaps because I don't believe in their consistency, if I can say it like that. As well, we got to remember we did not have any key short-term SMT, which a lot of people like to call local SMT. Because well, if I compare ES and Nasdaq here, short term, there's nothing. Now, if I zoom out and we look at the liquidity, I'm actually going to have to go on a higher time frame here, and we look at the liquidity specifically, possibly an hourly, we'll be able to see there is SMT when comparing swing points here. So as you can see, Nasdaq was below these points right here, which is around the 10th of June, second week of June, which on ES is right here. So we had SMT showcasing that ES was bullish, was stronger to the upside, if I can say it like that. But even then, as I say, I like to concentrate on Nasdaq. But if we compare, which is in this case, you would look for longs on ES, prioritizing ES because it is currently the strongest asset, then you can notice that the unicorn formed was very beautiful. No matter which asset you decided to trade in this specific case, both unicorns were very nice. You would not have waited for it to retrace into this fair value gap because this fair value gap is overlapping, more specifically, right? So you would not have taken this inverse fair value gap because it is too far away. It is above our threshold of 5 handles, but this fair value gap is in close proximity to our breaker, so you can regard it as a unicorn. Taking the entry here on Nasdaq as soon as it retraces into, right, would give you a stop at this order block, if I am not mistaken, because we have yet to invalidate this fair value gap, to inverse it, if I can say it better. So you have indeed your order block followed by the 2 fair value gaps onside, bullish fair value gaps above. So you would have quite a wide stop at 64 handles, but when we take into account our objectives, right, it is acceptable, if I can say it like that. Now, utilizing standard deviations to get a higher probability objective, you could find that the reversal zone being here, you could go on, sweep this, have a close of your candles respecting this level. So the liquidity above this high, which if you look at it, is also very in close proximity. I was looking for the word there, to the opening range high right here. then you figure out that you have a very good low-hanging fruit objective for a partial that offers 2.52R. So it is a very great spot to take a partial at this level. And as you can see, with very low resistance, well, you had a little bit of drawdown at this level on these candles, just returning to your break even, respecting the same fair value gap, and then following that, the expansion higher. If we look at ES, we had closer objectives along the way, but all of this was low resistance liquidity, so your objective would have remained the same. And if you notice this gray box, these are our 4-hour fair value gaps that we would have been targeting for a short-term retracement objective. So you had everything aligning. If we even draw the standard deviations on ES, you'll notice that we align with the same area for the swing high to take profit. Even could have taken profits a little bit earlier. And just because ES is the stronger asset, I am going to consider it for the trade. So you have an inverse fair value gap at this level, which we invalidated, so we would not use that specific PD array. So you have fair value gap, order block, and then fair value gap below, leaving your stop as 11 handles, which is quite large for ES, I would say. So I would definitely tighten my stop to allow it to trade back into this inverse fair value gap, but not further, to allow for a 2.2R to my low-hanging fruit. But if we use a purely mechanical approach, 1.7R to your low-hanging fruit, which is plenty. Honestly, I would just leave it as I would take off one contract here at this level. So let's just say I mark it out as a partial. And then you have clear relative equal highs just to the left. Well, not even relative equal highs, just equal highs with low resistance liquidity that will offer 2.34R before, of course, leaving a runner on all the way to your final objective for 3.6R. But as you noticed, oftentimes, even though ES is the stronger asset, Nasdaq will offer more risk to reward for the same exact trade. Hence why I tend to concentrate on Nasdaq, even though I utilize ES all the time. Glad to see you in here, Wolfe. You know, we talked in general a little bit. I know you've had your fair share of issues here and there, but every trader does, right? So it's nice to see you in here on a Friday night, grinding with us, going back over those days that you might have had a harder time live, but now you get to review where you could have filtered to catch the best probability objectives. Thank you very much, dude. I appreciate hearing that. So that's the first trade I would ever consider. I don't know if you guys remember from general, but on Thursday I was done pre-market. I took a small long here that I took profit one contract, then got stopped out break even, and then I played this small run. I really had low expectations, so being able to catch 50 handles with 3 contracts, I was super happy. I got the fuck out and I just demo traded the whole rest of the day. There were shorts opportunities, there were long opportunities, and we'll even see further down the line that there were even more opportunities to go for. I'll speak more on this at the end, Wolfie. So stay until the end. I do want to finish this price action review part, but then I'll gladly answer your questions. All right. I just want to do one thing at a time, you know, it's so just so the people on YouTube are more into the video as well. All right. But yes, so first opportunity, and of course, I always recommend that. It might be the greed within me, but I usually tend to hold till further objectives to equal high levels at this point for standard deviations with your higher time frame PD array. This is a clear area where you would look for profits to be taken, right? You would look for price to gravitate there, but definitely you do want to take some early profits, and we've established our clear low-hanging fruit objective here. That was reached pretty quickly too. If I do go check, 28 minutes, beautiful, during the silver bullet hours. If you look, 11 stands right here. So definitely very clean PA for that beginning, which was not to be expected, but we gladly accept. Now, what do we understand about higher time frame arrays, right? Whenever we have a setup that forms on side with those, that setup will be higher probability because it shows us Through the creation of, more specifically, the unicorn and the rise model, it shows us that that array is currently being respected, right? I just noticed that I deleted all the drawings on ES, so I am just going to go back and draw our fair value gap that we were talking about. And I'm also going to draw the next one because, as we saw, ES was the stronger asset. It did retrace further into its range, right? And just making sure I'm still on Thursday, we had a lunch rate. Well, you might say, because you look at 130 and you're like, well, shit, we didn't take out any side of the range up until later, and then we didn't go up. We barely retraced and continued lower. Well, it's very simple. Whenever our objective is met during lunch, so I am going to talk about these equal highs, but I'm now going to delete them, right? Equal highs have been reached. We are within our higher time frame point of interest. So what happens? Well, we are going to refer to the noon to 1 range instead. Instead of referring to the noon to 130 range, we're going to refer to the noon to 1 range and look for a raid on one side of that range in line with our bias, which at that point would have been done, right? The retracement higher is done. We can continue going lower. Just want to make sure I did the right thing here. There we go. And we would have had a clear objective at lunch lows, which were formed at 1209 right here. I'm going to mark them out as an objective, right? A target. It does seem that, all right, no, that is outside of lunch. And it is a return to our fair value gap, which we have now inversed on ES, right? So just what you got to remember is that when you are going to have an objective that where everything aligns with it. So you can say, oh, we're returning to the inverse fair value gap. We're going to be targeting lunch lows. We had our rate. We have our setup form. Everything aligns. That's when you get the highest probability objectives. Here's a good question. When would we apply SMT to our trading decisions? I noticed that sometimes we get SMT between the two assets, but it becomes irrelevant. It doesn't seem very consistent for confluence. All right, I get what you mean. So basically, what you're saying is, oh, sometimes we have SMT, but then 5 minutes later, it invalidates it, right? So it forms SMT on the lows, but then goes to break the low. Why? Because these two assets don't move at the same rate. Right, Nasdaq is way more volatile and aggressive than ES, and even sometimes it's the other way around, where Nasdaq is just consolidating while ES is expanding. The truth about SMT, and the reason why I tell people to never come to conclusions off of SMT and only use it as a confluence, meaning, for example, an additional rule, is because of that specific way. It is not discretionary, but there are a lot of different ways you can be looking at SMT, which I don't want to get into at this very moment because, as I said, it is not what I recommend to do. What I tell all my students, how I teach them SMT, is to only use it as a confluence, meaning this setup is better because it has SMT. Right now there is SMT. I am not going to open my 15-minute chart to verify every swing point, but you'll notice that just from hovering here, ES has taken these highs while Nasdaq has not, right? Just from the PD arrays, just from the fair value gaps, we can notice that. So there is higher time frame SMT at this level, meaning that there is divergence and hence price has a higher chance of reversal. And more specifically, I tell them to use SMT in confluence with my specific model, the RISE model, because whenever you have a setup where SMT is present, it has a higher probability of success than if there was no SMT. So again, it all comes down to statistics, and I understand that if SMT is present, my setups have a higher chance of success. So that's how I utilize SMT. And I look for SMT to form at key levels to give me insight into exactly what price is doing and why. Right? So yes, you can utilize it in a bunch of different range, but in my personal opinion and how I utilize SMT, I never take conclusions off of it. I just use it as a filter for setups, meaning no SMT, no setup. Does that make sense? Awesome. All right, so back to this setup. Unless you have an additional question, right? We're here, hit or miss essentially. Well, if you were to Look at that, because that is something I have done. I've made a script that looks at SMT, finds SMT. And if you would long every bullish SMT and short every bearish SMT without any sort of confirmation, meaning without combining it with any sort of other concept, it would be extremely inconsistent, because SMT on its own could be anything. But when you combine SMT at the right times with the right specific arrays, that's where I see the value in SMT. That's why I always utilize it as a confluence, and more specifically a way to filter setups. So I wouldn't say it's hit or miss. I'd say it's about probabilities and making sure that you engage with the markets at specific times. And that's why SMT for me is a filter. Very nice to see you, Josh. We're on Friday night, quite a small audience here. So welcome to you joining. My pleasure, Wolfie. We're chilling, reviewing Thursdays and Fridays price action, right? Which is, I was just going over. Oh, that's awesome. After dinner, it's 8:53 for me. We were just going over this beautiful lunch trade, and I was going to showcase our breaker block, again, mechanically defined, where, and just to remind you guys, Nasdaq being currently the weaker asset is where you'd want to concentrate. As you can see right here, we did not yet take out the lows of that range. So technically, is this a breaker block? Not yet. Hence the anticipating type. More specifically, closing below this, and now I'm starting to have a little bit, a few lines, right? So closing below the lowest point of this range, utilizing the candle's bodies, is how I utilize breakers most of the time, right? We did review this last week and 2 weeks ago, actually, just before I went away for vacation, in one of the PA reviews. So that's how I am able to anticipate it, because I do understand I want to see price run through the specific liquidity that will form your market structure shift. So I do recognize breakers in this specific way, even before they are mechanically defined breakers. So your first entry would be here. Offset distribution above lunch highs. Yes, beautiful as always. That's, you guys might notice from my Twitter, but I almost only post long trades now because I just see them, and I'm usually not trading in the PM session because I'm done for the day before, whether that's good or bad, and end up just posting them and being like, wow, what a beautiful setup, right? But whenever we look at trades, I don't like showcasing the best case scenario. So if you were a beginning trader utilizing breakers, you'll notice that that breaker was formed here. So now you start looking for unicorns, for example, at this inverse fair value gap, which traded into it by a tick. If I zoom in, you'll notice it by a tick right here. So your entry was there. You might have been a bit late. Whenever we're live executing, it's not always this fast. And taking into account, again, the RISE model, you'd have your inverse fair value gap. You have a very small fair value gap right here, followed by the order block in confluence with the swing high for 21.5 handle stop. So very nice stop there, very average. And then again, you'd have your lunch trade objective. But now, would you really hold for 7R and be up 5R and not be looking for a take profit? Well, you might, but I personally won't. And again, always looking at a mechanical approach to price, you'd use your 5-minute range that you'd be looking at, the lunch trade, premium and discount. Where's my first discount and efficiency? This is a high of the 5-minute fair value gap. So I would use this as a partial objective for my trade. All right, anytime I'm looking at trade setups during these PA reviews, I look at specifically for my model, right? So we do look at price, but we analyze it within the eyes of the RISE model. Just trying to give a little insight to Josh here. So beautiful 3.67R trade. Definitely a great objective. I would have liked to see take profits along the way, right? Personally, if I was going to be trading this short, I would have taken profits way earlier, because 80 handles, 3.67 Rs, just take one off at 2R, right? You're better off just locking in, paying the trader, taking easy profits, and then leaving a runner on for your partial objective, for your final objective, and possibly even for a continuation, which would have allowed for a beautiful trade, but that is not always realistic to look at. So definitely 3.67 R at the partial. Very happy with results like that. Exactly, Josh. Exactly like that. I'm always looking to bring a simplified approach to some concepts which you can push extremely far. So you guys see Josh right here. By the way, 2 degrees tool. He is 2 degrees tools alongside two. So these guys are awesome. You can see their tools linked in my official link. So definitely go have a look there. But I'm always trying to bring a simplistic approach to very complicated things like the markets, right? So definitely a beautiful day, allowed for a nice long analyze PM short setup, at least through the eyes of the Rise model. And am I going to consider anything else? No, because I'm not going to consider shorting here because I'm already in a trade here. So even if I close this trade fully here, then it's FOMO or tilt to be placing another trade based on my understanding. So I'm never going to be adding trades there. And am I going to look for a continuation opportunity at the start of lunch to keep going higher? No, because if I didn't miss my first entry, I would have been already in this trade. And if I fully closed that trade, it was because I was happy with the results, and hence I'm not going to place another trade in that direction with the same idea, because that would be, again, tilt or FOMO. So always keeping your psychology in check, being happy with less will make your results skyrocket. You'll notice it just from backtesting that just keeping low-hanging fruit objectives in mind will truly improve your trading, if I can say it like that. So just looking at Thursday, because we were unable to do our price action review on Thursday, very beautiful price action, which at least in my mind was not to be expected after a day like we saw before. Huge 650 700 handle down play, but we had beautiful price action. So thank you, Nasdaq. Moving on now to Friday, which is where we can remove the replay mode so we can actually see Friday correctly. And going back up to a daily chart, what would you expect on a Friday of a classic sale week where we've made the high of the week on Tuesday and just continuously expanded lower? And one thing to take into account, where Wolfie, you might appreciate this, a use case for SMT, we also have SMT, which brings confluence that this uh, sorry, let me just mark it out right here, that this low we've made on Thursday could hold into Friday for at least some sort of TGIF retracement. My understanding of TGIF is I only look at TGIF on classic sell weeks, classic buy weeks, a week where I've seen expansion into Thursday and where Friday I can anticipate a retracement into a range. Yes, similar to the higher time frame SMT at the highs. So since I have that SMT, I can consider the low of Thursday to be a candidate for the low of the week, meaning that I have high probabilities of seeing a TGIF setup, right? So as I explained just to you a second ago, I utilize SMT as probabilities, and I understand that if SMT is present in this specific way and with this specific weekly the power of 3 and expansion at the moment, that there is a high chance of TGIF on Friday. See, you're always going to be mad that you miss out on opportunities. That's one thing that's going to be constant. So you got to learn to accept the fact that you won't be in every market move. You won't be able to catch every single expansion. You're going to take profit on your trade like what I just showcased on Thursday, and then it's going to run 250 handles without you. But the truth is, are you making money right now? Whether that's yes or no, it doesn't matter, because if you are, then why change anything, right? And of course, you can always improve, can always get better, and without changing your model, you could open yourself up to more money. Yes, but that takes time, that takes analysis, that takes data, right? You always going to have a way to improve, and you're never going to have perfect performance in these in anything in your life, actually. That is my personal opinion. So just be happy with what you're able to get, and don't look at, oh, well, if I knew to long perfectly at this tick because of, I'm trying to explain a reason, because of this already rebalanced zone of my fair value gap, then I could have taken a 500 to 5,000 handle longing this right here. I'm going very, I'm exaggerating a lot at the moment, all right? But you're always going to be able to do better. So you just got to be satisfied with what you're able to achieve if it aligns with your goals, right? And what are your goals at the moment? Let me guess, being a profitable trader, consistently taking money out of the markets, and that comes through low hanging fruit objectives, in my personal model and opinion, right? So definitely, we're going more towards the psychology side now, but yeah, I would definitely recommend that you don't go into that loop. And especially with Josh here, we talked a little about that yesterday. Don't start going into that negative loop, because it is extremely hard to get out of it afterwards. So don't start thinking negative. Just say, okay, that's part of the game. What can I do to fix it? What can I do to move on? Exactly. Just don't get into that negative thinking. Just to keep moving with that specific idea, Wolfie, definitely when you greed during trades, I know I did, and I'm a bit of an extremist when it comes to fixing some bad habits that I have, and I decided that for the next month, and that was back in the, wait, when was it? It was late autumn, so I don't remember if it was October or November, but I remember that I was holding for too long and just ending up giving back way too much money. So I forced myself to close out my full position at 50 handles no matter what, which always aligned with 2R pretty much, but I never liked using fixed R's, so I was just using fixed handles instead. Still had a bit of an ego back then. So I was just forcing myself to close my full positions at 50 handles. And after a month, I saw the results and I was extremely happy with them. So I don't necessarily recommend you do that. And it depends on your model, your average expansions that you're able to grab and all of that. But definitely I went into the other extreme, and it did help me out with always wanting more and more and more out of a trade. Even if I'm up 200 handles, I still want more, right? It is an extreme rule to have, but definitely what I decided to do to fix my issue of always needing more handles to it. Give me that extra zero point 0.5 ticks because I want it. Well, ICT always said that the biggest downfall he always had was his exits. That's the only time where he felt that he wanted to improve, right? His exits. Meaning, if ICT can't have perfect exits all the time, then why do you expect you can? And I'm not being right now saying, oh, well, ICT's so good and all that. That's not what I'm saying. I'm just saying a trader with a lot of experience who teaches you the concepts that you utilize, then how do you expect that after X amount of years, you could do this better, or you can do this while he couldn't? I'm not saying you can't. It's always have dreams, just work on that, study, figure out the best way to exit trades. But right now, the goal is it to make money, or it's to have the perfect exits, right? 100%, Josh. Learning to trail your stops at the right spot and not over trail it and not under trail it where you're giving back too much money is a big game changer. Big game changer. I would put it on the same level as learning to scale in of positions, right? Which basically tells you scaling out of positions while trailing your stop. That is one of the studies that I constantly do and take note of. 100%. I don't want to repeat this out loud because I feel like I don't know. I feel like ICT convinced me in that way. This is not something for YouTube. This is something for the people that are here currently. And what Josh just said, really, copy paste that into a note somewhere and study it, right? Advanced market structure. Compare swing points, right? I don't want to say too much on this because you guys will see it as soon as you start studying it. But this is definitely a point that could help you out with your trade management 100%. I'm actually studying this at the moment to try to push it further to help out with my trading. So I would recommend it. But I've been ranting a little bit as I usually do. So let me just get back to price. Anyways, personally on Friday, I didn't see much objectives personally. I did not trade today. Just didn't find something that I wanted. But we had our TGIF objectives starting on Friday. And you can utilize the low that was formed on the previous day, of course. But ICT talks a lot about this, about how when you're going to form the low for the day, then you want to see the TGIF happen. And in this specific case, we had a beautiful low of day candidate with SMT. Again, Wolfe, utilizing SMT as confluence to an idea, rating these relative equal lows. So it was definitely here. I would say today was pretty much search and destroy. No, I got wrecked. Well, see, here's comes the importance of risk management, but more importantly, in my mind, a maximum amount of trades. Because when you don't have the experience to notice these things as they happen, to take a step back and really visit, am I just trading back and forth? Is the price search and destroy? As looking at ES right now, that's what I see, right? I see broadening or widening, however you want to call it, but we're just taking out highs, taking out lows, taking out highs, taking out lows. That's what we did, right? With my beautiful little overlapping drawing that you can see. But on Nasdaq, even though just looking at 50-minute candles here, we did a lot of back and forth during the silver bullet here. I do believe we had a nice expansion afterwards. That was on side with our higher time frame explanation after we had a low of day candidate, which yes, would have been considered at this point, but also had a lower time frame SMT as confirmation, right? I'm gonna plot it on a different color just so you guys can see it great. But this one point and this, so the alignment was with this one here, but I'm just going to showcase it with the swing points so it's easier to see. Where were you relative to midnight? Did you see large London? Basically explaining when you would consider the possibility of search and destroy, right? I was actually thinking of doing a thread about that specific logic because I've seen a lot of people doing it, but they don't showcase the same stuff that I consider during my pre-market analysis. Would that be the kind of content that you guys would enjoy? Possibly through a YouTube video showcasing what tools and how do I do my pre-market analysis pretty much and recognize search and destroy conditions, or well, try and predict search and destroy conditions before they happen. Well, let me take note of that before we keep moving forward, right? These, you guys know, right? Kaylee, you're always here on our Fridays. These are more familiar calls, less strict, if I can say that. We're just talking out here. We're chilling. It's a Friday night and we're studying price. So we're just taking it easy. Pre-market routine video. Well, you guys know, now that I've written it down on paper with an actual pen, I can't go back on my word. So that's coming. Discover process for change. That is a very nice sentence. Figure out how could I change that result in the future. Definitely a very volatile week. 100% there. That's a big thing, right? That not a lot of people speak on. Whereas I usually say it with my specific trades where I was like, oh well, on this trade I was half leveraged because that day did that, right? So you gotta be able to recognize low probability conditions, which doesn't mean that you aren't looking for a trade because you still have a high probability setup, but you understand that with what the day has previously done, you don't expect much out of it. So you can adjust objectives, right? Lower, I'm thinking in terms of a bullish setup, lower your objectives, bring them closer, but also possibly lower your risk. Whereas a day like this, where you want to test it out, you want to try and push it, well, it won't take a hit if it reverses on you. Weekly, monthly, definitely. Average range levels, that is something that I've been working on recently. So definitely that is coming as well. A lot of great content getting planned recently. You know, Wolfie, you're noting a lot of problems with your training, right? But I'm guessing, right? I'm not going at you. I'm just guessing that if I was to ask you for proof, could you send me your journals from every day you've made a mistake, explaining why that mistake happened, how it happened in price, and a possible solution so that that mistakes doesn't happen again? I'm going off of the majority of people, they don't do that. No need, no need. But truly, I would recommend that you journal every day, at least that you make a mistake. I have taken the habit of just journaling every day because I used to skip my journaling all the time. So now I force myself to do it every day, even if I don't trade. So I would really recommend that. You'd be surprised by the insight you gain by reviewing your own little trading, right? Your own journaling, just the insight you get into how I was thinking at that specific point in time, right? How I was feeling on that day that I fucked up. So you'll get some great insights. So I would recommend that. If you shoot me a DM, I'll gladly send you a template for daily journaling, regardless of PNL. That is good. That is good. All right, I am gonna push through this final day, right? Because I do have one specific setup I want to showcase. Because video's already 40 minutes, so I don't want to push it too far. But I'll definitely stay in here if you guys want to keep talking about trade management, psychology with trading. I'm ever so ready to talk about that. That's awesome to hear, Rolfe. Glad we could be of service, right? That's always how it is. But going back here, as you stated, right? Search and destroy, broadening, a bunch of stuff. Whenever I see consolidation, I always look for one specific thing. I need to see a rate on that consolidation. And is it framed? Well, again, that's some stuff I repeat on every price action review, I feel like, but through SMT. So now I am looking for a long, right? Why? Just all the logic we previously talked about from the daily and the 4-hour time frame. I'm looking for a long, I'm looking for a retracement into our weekly range. I'm going to remove our 20% level, which was already mitigated, and actually the 30% also that is close because you would refer to recent price action anyways. So how do I forget about the divergence at these levels, more specifically from the swing point from the 830 news, right? So data highs. How do I not look at this? How do I forget about it, even seeing it in front of my face? Well, it's against my side. I'm looking for a long. I'm thinking the daily expansion will be higher. Continuation of the move from London, formed SMT at the lows with my higher time frame. So I do anticipate a continuation higher. So what am I going to do? Well, after this opening range, if we look at 1030, after this opening range consolidation, I see a clear raid with SMT, more specifically on side, right? So I feel like I'm repeating myself a lot, so sorry for that, guys, but this SMT tells me that the idea I have is higher chance of success, right? Higher probability idea because this SMT is present at this level. So that's the easy way to utilize SMT in my mind. Now, we review the same as we did on Thursday, right? Invalidation of bearish arrays. What does that tell you? right? Forming inverse fair value gaps. What does that tell you? Well, price has a higher objective. No matter if it's the liquidity right above, the order block just above, or your higher objectives, you have everything there, right? 11:30 for London close, and you will see clarity. 100%, 100%. Just having that basically waiting for London close, just letting it consolidate without you, and then trading a continuation of the previous move, which is pretty much what happened here, right? We have a continuation rise model. Don't know how good you guys are now at spotting these, but you have your breaker, you have your unicorn. But since it was not within a certain amount of time, I would wait for continuation entry. What does that take? Well, I wait for retracement into a range. More specifically, I'm going to be referring to premium and discount. If I pull these up, you can see that we return to a discount volume imbalance right here that we could utilize as a possible draw at that time. And then I'm looking for a sign that it's going to go higher through the invalidation of a PD array, right? The creation of an inverse fair value gap, which is right here. Even though we can see that later was not respected, this is your entry. You're taking a limit on this specific moment. And yes, it is not a clearest trade, but it is a continuation entry. So I did want to showcase it. You have beautiful almost, well, 1.7 R at a low-hanging fruit objective, which is the external range liquidity of your current range that you saw us trade back into, followed opening range highs to invalidate this SMT. Then you have clear low resistance liquidity all the way to data highs. So I didn't want to showcase this trade, even though it is not the cleanest, it is not the easiest to spot, which is one where a student of mine came to me and said he missed it and it didn't matter, right? This is not the type of trades that will make the big difference. From seek and destroy origin, session inversion, time divergence. That is some more advanced level, more advanced stuff than I usually go over in here, but definitely some cool stuff. 11:30 for London close, 2-hour chop generally sometimes can be 3 hours, rare to be through 2 p.m. Agreed on that. And I haven't really studied that in the morning session for sure, but definitely in the PM session and how morning consolidation affects the PM session, which, as you can see, you had a very aggressive retracement into our range, followed by consolidation to a close. So did you have a short opportunity? Sure. Am I going to showcase it? No, because I was looking for longs. So why am I going to showcase a continuation on a Friday PM session when I was looking for retracement into our range, right? So that's just specifically, but what did we do that day? Consolidation into a raid, into expansion, into retracement to a close. So definitely very nice day, right? I just wanted to put an end to that very quickly because I've been ranting for too long and we've been talking psychology, so just don't want to pull. Well, you know what? They're gonna have a 50-minute video on YouTube. Why not? Appreciate that, Josh. Very nice to have you in here giving insight. And I'm free. I always forget the words when I'm tired like this. Been a big day, right? But giving suggestions is not the right word. Advice. There we go. It took me a bit, but giving advice to the people here, it's very nice to see. Especially on those Fridays, guys. Those Fridays are the best. Yeah, not financial advice. Don't worry. There's a big disclaimer when you join the Discord. They have to have read it. So, all good. Oh, don't worry, Wolfe. Sing songs around the campfire advice. 100%. Who reads NFA? You can't tell me that. You can't tell me that. That's very dangerous. Very dangerous. But on that note, guys, I'm gonna be honest. I am dead, dead, dead. And I got a little bit of work to do before I go to bed. So I wish you all a great night. It was very nice having you guys here on a Fridays. These are always the best for me. But recording will be up on YouTube shortly. So in case you want to revisit anything. And yeah, Wolf, just tag me in general with your questions and I'll answer them there. All right. Feeling a little tired, so I'll revisit them 100%. Have a great weekend, you guys. Take some time off. We'll be back Friday for our weekly outlook. Have a great time. Thanks, Josh, for stopping by.